And good afternoon. This is the Elliott Wave Daily Update for the S&P 500 being recorded on Thursday, September the 25th at 2:35 p.m. Pacific Daylight Time. Received a little bit more confirmation today that putting the minute wave 3 up at that 67.67 high, 67.58 high was the correct thing to do. And so today the market did continue to decline and basically almost retraced what would have been part of that subminuet wave 5. And we were considering that it was going to be an expanding triangle. So it basically it was almost um, overtaking all of what would have been labeled as wave 1, all of it. So that put a little bit more evidence together for me that is minute wave 3 up there, and we have now begun the minute fourth wave correction. Now, also today, we managed to finish up and put 5 waves down in. I'll break this down to the 15 minutes so we can look at the internal on that. So basically 1, 2, and that's very tight up there, and then 1, 2, 3, 4, and then a 5 for the third, and then a ABC up for 4, and then 1, 2, 3, 4, 5 for wave 5. I've marked it wave A or 1, and I'm doing that again on that sub-minuet level, going back again to our hourly chart. Ultimately, that's where I'm looking for this minute fourth wave to get to, basically 63.72. So it's still a pretty far way down. So I'm labeling this A or 1 of a sub-minuet level because I'm looking for minuet wave A. Remember that the minute third wave will be an ABC of minuet degree. So we're working on that first leg, the A wave. So either this is going to be that the larger wave A, this minuet wave A, will end up being a zigzag. In other words, it'd be 5, 3, 5. That's going to be my first thought. Or it's wave 1 of minuet wave A. So we're going to leave that open for right now. But what we're now going to be doing is very likely we are going to have a bounce. If it is wave A or 1, we should have a bounce. And that would require that we put up some retracements. And so it's going to come right down to that low. I'll go over here. We're going to put it into the right color, set that up, and then put our fibs together. And so we're going up in the other direction. So we got, and this is a wave 2. Actually, we should get 382, which I believe we got. Well, we got over 236. So I'm going to put 3825 and 618, and that's could all be part of that B wave. Being that it's 5 waves down, I'm not looking for it to be a flat, which would require it to get back up there. But let me just say, in recent history, we've done 5 waves for A wave, and that B wave came all the way, almost all the way back before again turning lower. So, um, market be warned, I guess, that we do have that. There's always that potential. But right now, we have 382 resistance at 66.75, 50% at 66.91, 618 at 67.06. And so I think a B wave very often will get to that 6.618. In fact, we kind of look for it to be the most common. And it'll come up in an ABC of its own. Now, breaking it down to that 15-minute chart, looks like it's probably kind of coming up there now. And either that's an A and a B, and we got a 1, 2, 3, 4, 5 for a C wave to put that B wave in place. But I got to let the market tell us. So again, these are the resistance levels coming back up. Then we will finish this first ABC down by putting in another 5 waves down. So again, once we do get the B wave, then I can run A up to B to get us the C wave. If we only get up to here, it's going to be pretty large. The C wave should be pretty large, going back out to that hourly. and opening this up just a little bit so we can take a look inside. And I'll put it all, let's just do a guesstimate so we can kind of get an idea of what we're, Lord, I usually got it set on the other one. Let's go back over and redraw. All right, so just going to run some extensions. We're going to take it as if it goes all the way up to 6706. And so 100% would be 6573, 1.618 would be 6491. But basically, we're looking again to come back down pretty close. All right, this was 6611, and we got a little bit underneath that at 6573. And that would be A, B, C. And the C wave is always going to be 5, so we're looking for wherever this ends up, we'll be looking for 5 waves down from there. And that's going to be how we arrive at our fibs. So we just take in the A wave up to wherever the B wave comes in, and then we've got the Fibonacci levels for the C wave. And being that if it only came down to here, by the way, then it is an ABC, and I'm going to label it as minuet wave A. And then we get another B wave, and then a larger C wave down. Okay, so to sequence, we've got wave A or 1. We're going to move it up, and we either got wave 2 or B. Both will have 3 waves. And then we're going to come down in 5, which could be C or 3. Now, being that we're, the power of this, the downside, that's where we're looking for the whole correction to kind of come in. So if I'm looking for 5 waves down from here, from there, and then another 5 down for wave 3 of A, so that's not going to work. So I'm leaving it A or 1 for right now, but I'm leaning towards it. This is sub-minuet wave A, sub-minuet wave B, coming down in 5, sub-minuet wave C, wave A, minuet wave A, wherever it ends up. And then we get a B wave, and then we get a C wave, and that still looks like it's going to get down to there or a little bit lower. Our next level after that is 6132. Not necessarily looking for that deep, but you never know. Okay, so let's just pull it out to the daily for a second. I want to just take a quick look at our moving averages, which are beginning to wake up a little bit. The 8, believe it or not, still has not, it's starting to turn, but it's not heading lower just yet. And we've had now 3 days of decline, but it always is that pull back up off the lows that keeps it flat. But the 20 is also going flat. The 50 is starting to turn into a flat, and so is the 200. Right there at that 0.382 level, the 200 is going to ride it. And that'll be interesting because that'll be support, and that is the most common for a 4th wave, 0.382. So we'll see. So we're starting to get some things lined up and what could happen. All right. Now, what do we have for tomorrow in terms of data? And let's go take a look. Tomorrow we have personal income, personal spending, and the almighty PCE index, which is again still the way that they say it is a primary index that the Fed and the members of the Fed look at to get their inflation picture all nice and put together. So PCE index 8:30 a.m. Consumer sentiment at 10 a.m. And we have 1, 2, 3 Fed officials out speeching. One has a TV appearance, and that might be on CNBC for all we know. And then we have 2 just out giving speeches. And we'll be updating our gamma levels tomorrow morning. Now, today on the way down, it wasn't actually as harsh as I thought it could be because they got readjusted overnight. So I'm going to assume that it's likely going to happen again. So I just want to quickly take a look here in in the market to see what we had. Our ES low was again 66.24. So on the way, we actually went through a volatility trigger, a large gamma 2, and then that was about it. We had the put wall at 65.56, didn't even get challenged because we didn't even get close to 6,600. So again, that likely is going to remain the same coming in tomorrow. That stronger support down to 6,000, I'm pretty sure will remain the same. Tomorrow is also a weekly expiration, and I think that we'll also be seeing a lot of things adjusted or rolled out to Tuesday. Tuesday will be the next major because it's a quarter end. It's the end of the third quarter, and a lot of things will be taken off from there or rolled forward. And that is it. That's it. It wasn't the heaviest of days. It wasn't the hardest of days. There was some good trading. And twice, when the market was going down, it was pretty evident, and then the rallies were sustained, so they were a little bit easier to go ahead and take the long and ride it up. All right, our next update will be tomorrow morning.